Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Steve Ankerstar. Allison has the morning off. Today, we're going to talk about three things: recession fears, what's going on in Gamestop, if you've been following that, and lastly, the earnings report from Fedex last night. We're going to talk about how it's affecting the stock and whether the stock is a buy, sell, or hold. Before we begin, though, standard disclaimer applies as a financial education presentation, so you must do your own due diligence before acting upon anything you hear. This morning, full disclaimer information is available at AnkerstarWealth.com. All right, let's take a look at recession fears. First of all, the specter of a recession. Going to CNBC.com, here are the futures. Get over to the main screen here and update that for you. So there you can see Fed Chair Bullard in the, he popped up there for a second, but we had the Fed meeting minutes release, or the Fed release announcement earlier this week, where we got the quarter-point raise, and there was one dissenter, and that was James Bullard, and that's kind of common for him to generally take a more hawkish line, and he called for a 0.5% rate hike, and obviously didn't get that. For the 0.25 was what they eventually went with. But he, and then the Fed announced that they're going to probably have 7 this year, so a rate hike at each meeting. That puts us at 1.75% by the end of the year. However, Fed Chair Bullard is calling for 3% by the end of the year for the raises. So multiple 0.5% raises along the way during the year to be able to really tackle the inflation situation sooner than later. And of course, anytime we talk about raising interest rates, whether it be a quarter point, half point, or more during the course of a year, immediately people start talking about recession. Now, it seems like that's every economist's favorite thing to talk about. And I will tell you that the joke going out in the industry is, the economists have predicted 40 of the last 3 recessions, right? I mean, they're always talking recession because and rightfully so, it's a terrible situation to get your economy in, especially when the economy is running hot. But when you look at what's different this time, well, the unemployment situation, or the employment situation, depending on how you look at it, is, you kind of need to have unemployment to have a recession. And we don't have that at all. If anything, we have the employment crisis, if you will, of restaurants, and even FedEx in their stock release said that in their earnings release said that it was largely a workers issue, and you see that all the way around. I'm a small business owner and looking at hiring, and I haven't faced it yet, but certainly if I have to get out there and either I can't hire somebody, or I have to pay wage inflation. Now I have to pay far more than I expected to get somebody to come on board. That's going to be a challenge. And if it's a challenge for me, there's, millions of small businesses and big businesses out there that are facing the same thing. So if you go out to eat a lot, which we do, a little bit of expensive habit, but we do like to enjoy going out to restaurants. And you've seen that, where it's just tough for the whole restaurant to be open, right? So personally, I don't think we're in a situation where a recession is a fear. Certainly it's something to keep an eye on, though. And every time there is a interest rate raise, there is going to be some talk of recession, and making sure we don't trip over into that. Now, if you kind of look at the 2018 model, we did raise interest rates significantly for a period there. Then the market dropped 20% in a month in December 2018, and we went back to zero with interest rates. I could see us going through that same sort of cycle, with trying to raise interest rates, overdoing it, and then having to go back to zero. So I think that's why the Fed's going to proceed so slowly this time around. And you actually see the headline pop up there, Fed Governor Waller. I'm not familiar with Waller, but half point rate hikes could be needed to tame inflation. So I think it's certainly on the table, if you will. So that's enough on recession. Bottom line is, I don't think we need to worry about it yet, but it's certainly something we need to keep an eye on. All right, second topic of the day, GameStop. If you follow this craziness from back in the day, look at the 1-year chart, and you're like, okay, that didn't look too bad. It was up here at 200, it's down to 80. I mean, gosh, that's only a 60% loss. But when you back out to a 5-year chart, I mean, this stock was dead for years. I mean, look how many years it just stayed dead, right? So GameStop, what is the company? It's the software store on the corner that's paying that huge amount of rent for you to get out of your house, drive to the store, pay a premium for a DVD, Blu-ray disc, cartridge, whatever the game is on, and then get in your car and drive back home. Or you can download it. I don't know. I mean, didn't we learn this with the Blockbuster model or Netflix? Remember Netflix initially, that we're going to mail DVDs to your door, and then finally they went, time to pivot, right? Well, GameStop, I mean, rightfully so, should be left for dead, right? Do their business model unless they make significant changes. Well, this is where, if you remember the Reddit folks, if you're not a Reddit user, I'm not. I looked at it a little bit during this time just to kind of see what the craze was about and it's a hype machine, right? It's social media. Groupthink, if you will. It's like, I'm old enough to say Yahoo forums and, the chat pages and things like that. Yeah, it's a bunch of people and nobody has any, people could have credentials. You have no idea, right? You just have a username and, people just start buying and selling and hyping stuff up. Well, if you participate in something like that, first of all, you could make a lot of money. I will acknowledge that right up front. There's a potential to get involved and make a ton. But generally I treat it like most things is where there's a few people making a lot and most everybody's losing at least a little, and some people losing a lot, right? To free up the others for making the killing that they make. If you remember Diamond Hands, Roaring Kitty was the name. The individual was, at least, I don't know if he was the actual ringleader or one of the ringleaders, but a general, if you will, in the Reddit army. If you remember all that talk and the Diamond Hands and the apes and, well, anyhow, that's what can happen. And, the stock went up from basically zero. I mean, below $5, not zero, but below $5, right? Left for dead kind of stock. And it went up, over 300 with all the hype. You see something like that. And there's people that bought all along that. And of course it crashed right back down to 40. So if you rode that train, you had an experience, maybe good, maybe bad. But yeah, I mean, painful. But when you look at where the stock price is now, it is $80. Anybody who hit buy, anybody who logged into a computer or their phone and bought a share of GameStop in the past 13 months is now down money. Okay. So when you go to analyze stocks, you may read a cool article or you may hear your buddies or you may buy a newsletter and it maybe get the, the certain folks out there have their rare buy alert. Just realize there is an underlying business that you are becoming a part owner of. When I say, hey, let's invest in Apple and Amazon, that's because I want to be an owner of that company, of a share of that company, albeit a very small share. But you're part owner of that company. So look at the business model and see if that's something you really want to be in on, or is it a stock that should have been left for dead this whole time. So that's my take. I wouldn't touch GameStop at all. And, if you get involved in these things where the masses are manipulating a stock, it's not illegal. Well, it kind of technically is illegal, but there's like no real proof of who's responsible when it's a chat room, right? So anyhow, this is going to happen again and again and again. It happened in AOL. There were pump and dump schemes with not with AOL.com, the stock, but I mean AOL chat rooms back in the day. So anyhow, it'll be around again. So, all right, last one I want to talk about today is FedEx. FedEx is a great company. I pulled UPS up here as well. They just had their earnings for last night and the stock's getting hit a little bit. They beat on revenue, but fell on earnings. And then their guidance was kind of flat with the worker situation, right? So tough times out there to find people and keep them employed. And we had, vaccine mandates and some people didn't want to get it. And that, then they had to go through some legal hoops to try to get a waiver to be able to work. And, there's a bunch of things that COVID caused some pain. And I know that in the flying world, that is one of the areas where they had some significant issues. So when you think of the two companies, FedEx and UPS, the best description I've ever heard is that FedEx is an airplane company that has trucks and UPS is a truck company that has airplanes. Well, when you hear airplanes and trucks, your mind should immediately go to, holy crap, they're probably getting killed with the increase in gas. Well, maybe they're not getting killed right now because they use futures and they hedge out, airlines and, anybody who does a significant amount of logistics hedges futures. So the price, can't spike on them and they go out of business. Right. So they buy these contracts. Well, I don't know how many years out. I heard Southwest had some contracts that 30 years out of fuel contracts. Right. I don't know if that's true or hyperbole or just somebody said it on Reddit. Right. But either way, they do have some form of hedge on these futures contracts. So they're not killed right now, but they also have to look towards the future. Is gas going to immediately settle back down to $2 and something a gallon? I don't know. Nobody knows that. Maybe it doesn't settle down. We shall see. But anyhow, when you look at these two companies, this is not something I'm going to invest in. I don't invest in FedEx or really any company involving airplanes. Again, part of that's PSTD from, being a pilot back in the day. So I know how expensive the workforce is and how finicky machines are. And it's just a high capital, high workforce expenditure type of business. So I'd say stay away, go with Amazon if you want logistics business. But if you're going to buy one of the two, look at FedEx, which has been kind of killed. Let's go to a 5-year chart here on FedEx. So of course you had 2020 and then the bounce up and then kind of settled back in, but sitting here really at a PE of 13 and a forward PE of 10. So really cheap from a stock valuation perspective. You get a little bit of a dividend, a little over 1% there. When you look at UPS, though, a little different story on the 5-year chart. UPS is on fire, right? They went down to 100 during March 2020. They've more than doubled that, and they haven't been hit at all. So when you look at valuation, you're going to pay a little bit more, up to 15 on the PE. You do get a little bit of a dividend. I wouldn't touch either here, but if you had to have one, I would go with FedEx. So that's all we have for today's show. Thank you so much for listening in, and we will see you back on Monday. Bye.